Welcome back to Investing Talk podcast. Today we've gathered, well, quite a stack of sources, focusing really intensely on SoFi Technologies. Definitely one of the biggest, most talked about names in fintech right now.
Yeah, we've dug into the fundamental reports, the latest technical charts, indicators, and looked ahead at the calendar. Lots of potential catalysts coming up. So the mission for you listening in is pretty straightforward. Based on all this data, it is now actually a good time to consider buying SoFi. Or, maybe stay cautious.
And we really do want your input on this. If you find this chat useful, please hit subscribe, like the video, and definitely leave a comment with your take below. Also, if there's another company, a specific one you'd like us to look into next time, just drop that name in the comments too. We do read them. Okay, let's dive in. Starting with the basics, the foundation, financial health. And the first thing that jumps out, really the headline number, is that revenue growth. The sources are all pointing to a really robust 43% increase in revenue in Q2 year over year. That's really outpacing a lot of their peers in the industry.
It is. And that 43%, it's significant because it suggests they're executing really well. It's not just market conditions lifting all boats. It signals strong demand for their whole integrated platform idea. And crucially, they seem to be managing that growth efficiently. Good cost control.
Okay.
You see analysts noticing this too, right? They're raising guidance, which shows confidence in the management and the strategy.
Right. And the raw numbers behind that confidence, market cap sitting up there, $31.25 billion.
Yeah.
Against trailing 12 months revenue of about $3 billion. So $3.03 billion PTM. That gap definitely screams growth premium, doesn't it?
It absolutely does. The market is betting big on future growth. But importantly, the sources also highlight strong free cash flow and plenty of liquidity.
Which is key for resilience.
Yeah. Exactly. Resilience, weathering storms, but also funding innovation, maybe even buybacks down the line, though the sources didn't detail debt levels specifically.
Yeah.
But, the real edge, the moat they're building, it isn't just the numbers. It's the structure. It's that integrated digital financial platform.
Yeah, that's the core of it, isn't it? They're not just the student loan refinance company they started as. Now it's lending, saving, spending, investing, all in one app.
Create stickiness.
Stickiness, exactly.
You come in for maybe a good loan rate and suddenly, hey, this high-yield savings account looks good. Maybe I'll move my trading here too. That kind of cross-selling, that efficiency, that's what really sets SoFi apart from, say, a traditional bank or even another fintech just doing one thing.
And connecting that growth to the infrastructure. We have to talk about Galileo. It's easy to just focus on the consumer side, SoFi the app.
Oh, absolutely crucial. Galileo is, it's the engine under the hood for a lot of other financial players too. It's their B2B tech platform.
Right.
So that strengthens their own tech, obviously, but it also diversifies their revenue. They're not just relying on consumers. Plus, think about it. All the data from SoFi's huge consumer growth. That makes Galileo's offering even stronger for other institutions looking for insights. It feeds itself. A virtuous cycle, really.
Okay, so the engine seems solid. Strong fundamentals, good strategy. But what about the stock price itself? Is it reflecting all this good news? Let's look at the technicals. The stock's been, on fire this year. Up about 60%.
Yeah, that 60% gain really shows the momentum. A lot of it driven by expanding their services, like we talked about, and also relaunching crypto options. That got some attention. Now it's trading around, $25.63 to $26.35 currently. But context is important here. The 52-week range is wide, like $7.57 all the way up to $30.30. Shows the potential volatility.
So with that big run-up and that wide range, is there a risk it's getting overheated? Even with good fundamentals, could the stock be running out of steam technically?
That's always the question, isn't it? But looking at the momentum indicators, the technical picture actually looks pretty stable, not exhausted. The stock's consistently staying above its 50-day and 200-day moving averages. That's, classic support for an uptrend.
Okay.
And things like the RSI, the Relative Strength Index, and HAMD. They're showing healthy buying, healthy accumulation, but not indicating it's wildly overbought. Suggests maybe more stable institutional buying rather than just retail frenzy.
Interesting. Let's connect that technical strength back to the actual news flow, those aha moments from the last quarter. The Q2 earnings beat on July 29th seemed like a really big catalyst.
It really was. Pivotal report. They reported $0.08 earnings per share, beat the consensus. Revenue jumped at 42.8%, almost 43% year over year, we mentioned. But honestly, the number that really moved the needle, the most compelling thing, wasn't just revenue, it was member growth.
Ah, okay. Tell us why that was so significant.
SoFi added over 800,000 new members. in Q2 alone. That's the biggest single quarter jump in their history. And they
Wow.
did it during a time of, you know, pretty broad economic uncertainty.
Yeah.
That number just confirms that their value proposition, that whole one-stop shop idea, it's really hitting home with consumers. People are signing up in droves despite everything else going on.
And what about the lending side, sometimes seen as the riskier part? Student loans, personal loans?
Also performing strongly. Once there was a bit more clarity around federal student loans, their private student loan originations jumped 58% year over year. Huge increase. And personal loans. The volume hit $1.56 billion. They're now calling personal loans a leading revenue driver.
Mm.
Shows demand for their quick digital lending is still incredibly high, especially maybe as traditional banks tighten up.
So firm foundation, strong technicals, validated by recent results. Okay, let's pivot, like forward, what's coming up? What are the triggers, the catalysts that could really move this stock in the near term?
Well, first, you have to acknowledge the analyst sentiment is shifting. The overall consensus might still be hold, probably because of that high valuation we talked about. But you're seeing more bullish calls from big names. Citigroup, for instance, just raised their price target to $28, kept a buy rating. Stevens kicked off coverage with an overweight.
That institutional nod matters.
It provides validation.
Okay, so looking at the calendar, the big one everyone's circling is the Q3 earnings report, right?
Absolutely. November 1st, 2025. That's the crucial date. It's expected to drive a lot of interest, potential upside, or downside, of course. Investors are going to be watching like hawks. Did that massive Q2 member growth continue? What's happening with net interest margins, loan volumes? That report will be key.
And then there are other, maybe less direct market events, like index rebalancing.
Correct. ETF and index rebalancing on October 21st. When those big passive funds adjust holdings, it can cause, temporary volume spikes, maybe some volatility. Worth watching. And then further out, in December, we get the major institutional ownership filings, Form 13Fs.
Seeing who owns what.
Exactly. It gives real insight into how the big money, the long-term players, are positioning themselves, a big gauge of underlying support.
Beyond those firm dates, what about the buzz, the rumors, the speculation that affects sentiment?
Well, what's interesting is the scale people are starting to talk about with SoFi. There are these persistent rumors, chatter about them maybe acquiring a regional bank.
Really? Why would they do that?
It could help them scale deposits faster, maybe get around some regulatory hurdles, strengthen their ability to fund their own loans internally rather than relying on capital markets. It's a big strategic move if it happens.
And then, of course, with that market cap and growth,
Right.
the index talk.
Exactly. S&P 500 inclusion watch, that's definitely circulating. If that were to happen, it's a game
Oh,
changer.
so.
Because all the massive index funds tracking the S&P 500 would be forced to buy the stock. Huge non-discretionary buying pressure. Add to that some speculation about maybe expanding internationally, like Latin America or Europe. It all fuels that longer-term growth story.
Okay, gotta ensure balance, though. Let's talk risks. What could actually derail this whole growth narrative?
Well, the main risks are kind of inherent to the sector they're in. First, ongoing regulatory challenges. Financial services always under scrutiny, lending rules, data security, capital requirements. It's constant.
And competition?
Intense, fierce. Not just from the big legacy banks who are finally up in their digital game, but also from other nimble, well-funded fintech startups biting at their heels in every product category.
But the sources suggest SoFi has some built-in defenses against these.
They do seem to. A lot hinges on that diversified model we discussed. Because they do lending, savings, investing, and the Galileo B2B piece, they aren't overly exposed if one area faces a regulatory hit or intense competition.
Diversification helps.
It insulates them somewhat. Plus, their management team does have a track record now of navigating these kinds of headwinds pretty effectively so far.
Okay, so let's bring it all together. Back to the core question. Based on everything we've looked at from the sources, what's the overall investment thesis summary?
The sources basically assign SoFi an overall bullish rating. Pretty strong. 8 out of 10.
8 out of 10. Okay.
And the reasoning is clear. It's backed by those strong fundamentals, particularly that consistent 43% revenue growth and the operational efficiency. Add to that the positive shift in market sentiment, those analyst upgrades we mentioned, and the fact that there are clear, defined short-term catalysts coming up, like that November 1st earnings report.
So it sounds like the sources suggest it could appeal to different types of investors, maybe short-term traders playing the catalyst, but also long-term investors betting on that integrated platform strategy.
Exactly right. It seems to cater to both horizons, which is interesting in itself.
Well, that wraps up our intensive look at SoFi Technologies today. We hit the big points: that impressive Q2 revenue growth, the massive 800,000 new members, and that crucial November earnings report just around the corner.
And maybe one final thought to leave you with, connecting back to that scale and index chatter. Given the growth, the market cap, and all this buzz about potential S&P 500 eligibility, those institutional ownership filings coming in December become, well, exceptionally interesting. The real question to ponder might be, how much conviction will the big passive funds, the large institutions, actually show when they potentially reposition based on that S&P talk? That institutional stamp of approval or lack thereof could be the next major long-term signal for the stock, perhaps even more telling than the immediate reaction to the November earnings. Something to think about.
Definitely a fascinating long-term angle to consider. Thank you for joining us for this analysis of SoFi Technologies. We'll see you next time on Investing Talk Podcast.